Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. I'm here in Market Chameleon looking at unusual options volume, looking at this table to see where the action is, and there is plenty of action this week with the market experiencing another run downward and a jump in volatility. And so you can see there's been a lot of action, particularly in some of the major heavily traded stock indexes like SPY and EEM, emerging markets. But the one that I really want to look at here is not an index, but it's a stock, and it's Hertz Global Holding, a company that declared bankruptcy and is going to be received the delisting notice from the exchange this week. Nevertheless, it traded 441,000 options, almost 60% of those calls, which tends to be bullish. So why are there bullish calls trading on Hertz that's going to go bankrupt? That's a great question. Let's take a look at some of the trades. Now, the thing is that the company's not going to be delisted right away, and it's not going to go into bankruptcy right away. So the stock still trades, and a lot of the action has been based on day traders who are getting in and out of positions, including options. So you'll see a lot of smaller contracts traded as people getting in and out of one lot. So the action that might be bullish might just be extremely short term. If you are looking at the long term, the only place for this stock to go is zero. It would take a miracle for this company to emerge from bankruptcy ahead of being delisted. So the bigger trades here are most likely going to be more bearish in nature, selling January calls perhaps, or selling October calls. So the easier trade would be to maybe buy puts if you think this is going to zero sooner rather than later. However, because volatility is so high in some of these options that people are selling them, of course, the issue with that is that if you have day traders pushing up the price of the stock, there could be some danger with selling options. So it's something to consider, but there's just crazy amount of action in a stock that is very nearly going to be worth zero. So looking at the stock chart, you can see it went from about 20 to about 40 cents here. It's jumped back up as high as 6 with all the day trading going on. So the stock is now just about under 3. If we look at the options, you can see just tons of, even with the with the stuff that is expiring, tons of volume in the 22,000 and the 3 puts that expired on this day. So a lot of action, just people taking lottery ticket type shots, even stuff, like I said, going on in October, January of next year. You can see a lot of options trading, probably a lot of people buying options, but you look at January 5 put, it costs $4, so the most you can make on that is $1 if it goes to zero. So you have to spend up. That's what happens when a company is going bankrupt, right? And you could sell calls, but there is some danger in that, of course, because of what happens with trading, and what happens what happens if something crazy happens. The company is going to be offering $1 billion worth of stock into the market to try to help cover its debts. I guess there's a theoretical possibility it could prevent itself from being delisted. Not likely, but possible. So there's always a risk to everything, and you should pay attention to that. But if you see an opportunity to make a trade here, just keep in mind that short-term trades are probably the safest way to go with something like this. I talk about this sort of thing and other strategies and interesting occurrences in the market in my Coffee and Condor service. So if you're interested in that, coffeeandcondors.com. Check it out.